when you
That'll
have
be-
the garage growers IPOing and getting interviews on like Meet Kevin, etc. It's time to get out. And they're like, remember Avant Brands?
Mm-hmm.
That's why I'm literally like, he's a garage grower who IPO'd. It's hilarious.
That's funny.
So all the concerns, right, that everyone's saying, it's like a grower is a very tough business. And I don't even know if the economics will ever make sense because it is, frankly, it is a commodity. There's not much specific brand loyalty. So the price targets I have like buy ranges depending on the scenarios, but basically what I'm getting at is if you can kind of expect anywhere between 12 on the low end, well, actually, sorry, 7 on the low end, and on the high end, 30, and then weighting the higher probabilities around the 12 to 20%. So, you have your little tail end risks, and you could probably say I should price in something like a decline on a tail end risk, but I'm pricing in about 7% growth on the tail end risk on the low side. I get to around a buy price of, this is going to sound awesome, but $6. And so then of the scenarios, which one do I have preference to? I'm trying to make sure that I get it within where I can assume about a 12% growth of free cash flow, which comes to around about $3.21. I think that's a very attractive price point to buy. So, and that includes everything within my strategy, which when I've been selling puts, the break evens have been well in the 2s. And that, so as long as we're above that, and as long as the break even's there, I'm all game for it. And I can just keep, selling puts, buying shares.
You're doing like covered strangles or something. You are owning shares, selling calls, and selling puts, right?
Yeah.
Okay.
Yeah. So I have, I think I said at the beginning, I have a lot of legs on this, but I think I have like close to 4 legs of sold puts. You've seen that, Blake, I think. Yeah. And then I'll buy shares, and then I'll sell covered calls on it too.
Yeah. That's where it's at.
Yeah. No, and you get really good premium all the way through. So I get really good premium on the puts, and then I get really good premium on the calls, and then the calls can buy me more shares, and then those shares can in turn buy me more.
So what is it going to take to talk you into selling super deep in the money puts like I was talking to you about a couple months ago?
Oh, I already did.
Oh, okay.
No, I already did. So basically the break evens on the 5 strike were not anymore. I think they might be like close to they should be in the 2s right now. But before they were pretty juicy, and those have done pretty nice. But yeah, I have the 5 strikes. I have the 5 strikes and the 250 strikes that are about to expire worthless.
So to modify, I want to hear all 4 of you. What kind of compound rate do you expect out of this? Like I mentioned, I'm expecting anything from 15 to maybe as high as 32%. And obviously some years will be better than others, but how attractive of a compounder is this company?
From today's price?
What from like revenue and cash flow perspective.
Okay.
Don't pay attention to share price, because that'll happen as an echo.
I'm saying around like 20 to 25% I could expect.
20 to 30%.
I mean, revenue, I would say 15 to 20%.
Yeah.
And I mean, free cash flow, a bit more than that.
Yeah.
Because
then, I mean, if you put a bit of multiples expansion in there and all that, you can achieve like way better in terms of stock performance.
Yeah.
To be honest, and to touch on the price target thing, I don't really have a price target, and I see things like, for instance, I just do some quick math, and if it's a no-brainer to me, I'm okay with that. And just looking at numbers, like just very quickly, I could say that HITI is very likely to generate like close to $100 million in free cash flow by like 2030, let's say. I mean, if you run the numbers, it's not really that wild of an assumption. I would say it's a good base scenario, especially with pure can and like entering medical cannabis and all that. And I mean, then you just need to apply the multiple you think it's fair. I mean, you can put like it's a cannabis business, maybe it just deserves 10, or you can say like 15, or you can say, oh, maybe at that time it will be way more normalized and HITI will have like a much more established company and all that. You can put like a 20. I mean, that's up to you. I would say like a 15 times multiple would be okay, let's say. And that would put it at $1.5 billion Canadian valuation, which is like 5 times what it is right now, without euphoria. Because as Blake was saying, I believe we will have a peak of euphoria. Like, I don't know if it's this year. I don't know if it's next year. I don't know if it's 2027. I think it will happen. I'm not investing based on that, not whatsoever. But I think it might really help in bringing multiples back again, even to stupid levels. And I would appreciate that. And I would just sell at least a portion of my position. I mean, it's okay. I'm not going to take the mistake again, like back on the previous bull market in the sector. I was one of the exit liquidity of the sellers. So now I want to be on the other side.
Yeah.
But even without counting